Kate, when we think about some of the lessons that you guys learned from this, in the report, you guys call out a couple of kind of key learnings, I'll call them. One of them is high multiples, which it almost has become like a joke at this point, right? In terms of everyone's like, oh, of course the multiples are high. It's just like, how high can they go? How do you guys think about that as you've been kind of watching this play out over the last couple of years, as you've been reporting on the tech industry? Like, is this something that's just cyclical and eventually kind of comes down? Or is there something that's kind of quote unquote, it's different this time that you think sticks?
I mean, I think there's probably two answers to that. And one is specifically about crypto and one is about the wider industry. But yeah, at this point, we do expect to see, 100 or even 200x multiples or higher. And they are ridiculous and they will come down, but it's something that we've come to expect. So it wouldn't hurt or help a company if we're trying to decide whether it should make the list. When it comes to crypto, I do think those multiples are getting larger. I think that they'll continue to rise through next year. Depends on who you ask, though. Some people are much more skeptical about what's happening with the Web3 movement and the explosion in venture capital interest in crypto, which is incredibly new and historically, wasn't there. So I think that'll last through 2022. But I'm sure Hannah saw that a lot when she was trying to put her list together. I focused on fintech, and that has been a sector that for the last several years has been really exploding, and the multiples and the valuations have been growing. And I think we're starting to see maybe some of that excitement diminish a little bit as VCs sort of shift over to crypto, though there is an intersection between crypto and fintech, more exclusively crypto companies.
Makes sense. And then in terms of the list and the learnings, I actually thought that one of the most interesting sections was also the venture capitalists that showed up the most. And I think that we usually think about the companies and kind of what they're building, what their product, what their valuations, their revenue, et cetera. But Kate, there's a whole section on everyone from Andreessen, the Y Combinator, to Founders Fund. Then even in China, you guys break down kind of some of the big investors there. Was there anything that was surprising about this, or is it kind of the storylines that people know that, the Tigers of the world, the Andreessens, they're just deploying, an immense amount of money, and so of course they're going to be in a ton of deals?
I don't think there was anything surprising about it. I think that one of the themes we've written about this year is that Andreessen and Tiger, are dominating venture capital. They've probably each done maybe close to 200 deals and hundreds of deals this year. Tiger, I think, actually is probably near 400. So like essentially one deal per day, which we've not seen that before. And they've kind of, as we've said, they've sort of changed and disrupted the venture capital industry by being so active in their deal making this year. So when we were putting the list together, I think we really expected to see them show up a lot. And of course, I mean, Andreessen has proven that they have a strategy of sort of outpacing their competitors. And I mean, especially in crypto, as you all know, they were much earlier to the category in raising their first crypto fund in 2018 and have doubled down on it far ahead of competitors who are just kind of realizing in the last, say, 6 months that this is a category that they need to understand and invest in.
Talk to me about Tiger. They've got almost $100 billion of assets under management. What is like your general take in terms of their strategy? What do you hear other people talking about? Do people like them, not like them? Do people think that they are kind of, smart investors? Do they think that they're just kind of spreading capital? Like, what are you hearing?
So Tiger is a really small team. And like I said, they've done basically one deal a day. And these are not small investments. These are very big, typically growth stage investments, though they are kind of going at all stages, which is interesting. I think that people think they are smart. They have a very specific strategy, which is to invest the capital and then walk away from the company, basically, meaning, they will give you your $200 million check, and maybe they'll check in with you once a quarter or maybe a little more often than that and just be like, how's it going? They also provide their companies access to consulting firms who will help them out versus a traditional firm would probably themselves offer that resource. They're very hands-off. And I think people respect that they are just going to be incredibly accelerated in their investing pace and yet know that they can't be involved with all of their companies. I think if they tried to be as helpful as a traditional firm like an Andreessen Horowitz, which is a model that is hands-on, they would not be successful. But the fact that they're willing to just walk away from each deal and just be like, yeah, that's who we are, we're not going to be hands-on, I think people respect that.